In today's video, we're going to talk about momentum, and more momentum. The question is, does momentum work in a bear market and a bull market, or just in a bear market, or just in a bull market? Well, that's what we're going to talk about in today's video. And again, momentum is one of my favorite topics. Most of my trades are momentum based, and that's what we're going to talk about today. To be a successful trader, you've got to know how to determine and forecast market conditions and use strategies best suited for that environment. What do you need for this market? I created a free class that tells you everything. Click the button below now to learn my unique momentum strategy, so you'll know exactly the best stocks that are poised to outperform and how to harness their profit potential. So the question for today is, does momentum work in a bull and bear market, or does it just work in a bull market, or does it just work in a bear market? Let's get into it. Here's what you need to know, and you may be surprised. Now, what is momentum? Momentum is when institutional buying, and you should know that most activity, when you see markets really move one way or the other, it's because institutional buying is moving the market. Retail traders cannot, they don't have the power, they don't have the share size to move the market. So whenever you see continuous buying or selling pressure, you're seeing institutions moving in. So those 50,000 share blocks of Amazon that you see moving into the market, that's not your neighbor or your grandmother, okay? That's an institutional fund managers buying or selling millions and millions of dollars time and time again. So you need to understand that momentum is continuous buying or continuous selling that takes place over a specific period of time, and it's continuous. And here's what you need to understand, so you understand how momentum moves. So getting back to the question, does momentum work in a bull market and a bear market? Yes, it does, but in a different way. Why? Let me explain why. Markets are driven by two factors, fear and greed. Greed is a lot weaker than fear, and that's why markets drop 3 times faster than they rise. If you compare greed with fear, you'll find that fear causes traders to drop the market very quickly, where greed is buying, and buying takes time. And what we want to see is we want to see accumulation over time. So momentum tends to work better with the buy side, because the buying is slower, more progressive and mechanical, and takes place and you can actually catch it. Whereas momentum to the downside happens much too fast, and it's very, very difficult to catch it. So in my experience, the best momentum trades only happen in a bullish cycle or a bullish phase or in an upside movement. When the market trades lower, we start looking at pullbacks, and we'll talk about that in another session. But again, momentum tends to work best in a bull market or a bull market cycle, because momentum is based on fear and greed, and fear is a much stronger emotion than greed, and it causes markets to drop too fast to take advantage of momentum. Whereas the upside, we're dealing with greed, which is more stable, and it makes it easier to achieve continuous buying pressure. I know that explanation is a little odd, but again, markets are based on two factors, fear and greed. When traders become more greedier than they're fearful, markets go up. When traders become more scared or more fearful, markets go down. And because fear is a stronger emotion, markets drop on average 3 times as fast as they rise. And that's a statistical number over the last 40 years. So you could take it down to the bank. So again, bull market, momentum, bear market, pullbacks, and we'll talk about that other time. Talk to you soon. Which 3 stocks are most likely to outperform the market over the next 2 weeks? Click the button below for my free training to help you become a momentum master, so you'll always know the best high momentum stocks to buy. I'll see you there.